Good evening, everyone. Welcome to our weekly market overview, where we go through our major sectors in SPY and our QQQ and IWM. Quick disclaimer: everything you see in this video is not financial advice; it's merely for educational purposes. Without further ado, let's get started. All right. So let's go to the weekly here. Always start with the SPY weekly. All right. So with the weekly, there wasn't too. I mean, we're having a inside body, long upper wick, long body wick. So we're kind of in an indecisive area. But one thing I did note, I mean, you'll see it on the daily as well, but we have our 20, which is green, and our 200, which is the purple. It's starting to meet up here. So, and I covered it last week, but one of the major things that we're going to be looking for is to see if that 20 starts to close underneath the 200. If I'm not mistaken, this already took place on QQQ, but you want to see it on SPY first. That's going to be your major market indicator. So we want to start seeing it go close underneath here. And then we could possibly look towards the end of the bull market, but I'm not going to go so far to make assumptions before it actually happens. But if you rewatch last week's video, you'll see at the beginning I kind of cover it, so I won't go into detail again, but do check it out. Let's go to the weekly. Put these. Okay. So I do not have all of the, there's so many lines. There's no way for me to get rid of the lines without showing you the fib as well. But what I want to point out here is we were looking at last week how from our previous low to our swing highs up here. Last week we had started to push underneath the 50% fib, so the 50% retracement of the weekly's uptrend. And I mentioned that we were sort of bouncing off of the 61.8. And one thing I mentioned last week is it's sort of what you consider the golden zone. So it's a good opportunity if there is a bounce to happen before any further downside. A good opportunity for a bounce would be around here, and then we see that this week. Not necessarily, like I mentioned last week, I don't think we're gonna go right away. We very much can, but an interesting thing happened this week leading into that bounce off of our 61.8 was one, we're now back in over the 50. And one thing we mentioned last week is we want to start seeing a rejection around the 38. And now that we have our 200 catching up, because that was another thing, is we're waiting to see some rejections at the 200 here. We want to see if we're going to have any recaptures over it. For a while we had the 5 SMA. This is the daily 5 SMA, kind of acting as resistance. You can't really see it too well on the weekly, but on the daily we'll go through it and you'll see that it kind of been acting as resistance for quite some time. And slowly we made our attempts over it, so we're trying to create a new trend here, or at least correcting the current trend. And one thing that's interesting about this week is, aside from us closing in over the 50 and hoping to get that retest near the 38, is it actually, we closed our week, our monthly expiry week. So basically what that means is on every third Friday of the month, generally it's considered OpX, which is monthly option expiry. And typically during this time is where you're going to see major institutions close their positions and look for opening new ones. Or they start to hedge against their current position, whether it's a longer term position that they're going in. They'll start to take on more short term positions to just, hedge the losses that's happening until their actual expiry takes place. So that's one thing that was interesting, is that we ended the week over the 50 at the option expiry. So it gave the thing with monthly options expiry is, once it's the day of it expires and shortly after the next few days, it usually leads to a lot of volatility, and it also gives you a bigger range, as well as a nice opportunity for a correction and trend. So we were looking to see if we had just downside and downside. Let's clear out some of these lines here for a second here. We've had just complete downside for the longest on SPY, and we're looking for some type of upside to happen, whether it's going to be a bear flag or whatever the case is. We were looking for some upside. What better week than the week of monthly expiry, where we can have those pushes that are out of the ordinary, that pushes us back into areas that we were looking for, as far as rejections ahead, right? So if we're sitting here at like the low, like the mid 50s, 550s on SPY, for us to even attempt to get to that 200 day, it was a $20 move, right? How could we possibly do it? But a monthly expiry date, volatility, and a week of Powell announcing his Q2 decision for rate cuts. Well, he didn't announce rate cuts, but the meeting about rate cuts was also a good catalyst as well. So what better way to have a nice area where we can start to have that small recovery before we either decide to make it the break for the upside, or actually do that full drop that we're looking for. So it's just really funny how everything just kind of matches up in a way for any moves that we have, especially on Friday. I know some of you may have noticed on Friday where I was kind of hunting for a level, and I mentioned 465 as that area, that target that we were looking for. The reason I say this, reason I said this was a few things, right? So when we have this huge push down that's happening, that has happened for a while, last week we kind of just struggled in this range, right? We have sellers pushing down and buyers bringing it back up, and we're not showing any signs of like a continuation down, right? We're bearish, but we're not leading to any continuation on the way down, right? Because whether you're trying to go long, you're getting pushed down. You're trying to go short, you're getting pushed up, and it's just been chopping around this area for a while, right? And this center point line here is our weekly pivotal point that we were looking at, which is our 56180. And so this week we had our final push over our 5 SMA. That's kind of been a struggle for the longest. So once we had that push over, I think this was Monday, right? We had the gap over it, slight correction in that push up, and then Wednesday we had this massive move up for Powell. We had massive push up for Powell. Here is the 61.8 area right here. Massive push up for Powell, and on Thursday we had that correction in that area. We still supported over the 61.8 and on the lower bounds of our range here. So this is kind of the area where we're chopping in, where the most volume is being picked up, right around here. It's like the 558, 560 area is pretty much You could say it's our POC for this smaller range that we're in. That's where most of the volume is sitting at currently. So once we started to lose, once we lost that 61.8 on the gap down that happened, because we gapped down on Friday. Yes, yeah, we gapped down on Friday, but we still supported over the 558.6 area, and that was like my entry for shorts. So once I saw us have a bounce off of there and continue to support over the 61 here, the only clear target would have been the 5 SMA, which was originally our first idea for any change in trend, right? So like if you wanted to have a relief bounce off of this severe drops, you wanted one, a retest of the 20 SMA, but two, you would need to start seeing price action close over the 5 SMA, showing us that there's a change in trend, right? Even though it's a short-term change in trend, it's that uptrend that we were looking for. So that's kind of where I got my target was, if it wanted to go up any further, or if it wanted to go up, that would be the target. That's going to be your exit. And that's most likely where the around the midpoint area for both the calls and the puts expiration date. It would kind of sit in the midpoint of our last 5 days range, which is our 5 SMA, right? So we went through the weekly. I mentioned the levels. Yeah, so on the weekly, one last time, just mentioning that we wanted to see, we want to start looking for the 20 to start crossing underneath the 200 to give us more confirmation that we're going to head more towards the downside. I think with this week coming in, following the expiry, there's so much more volatility that the market could, it can provide for the market to give us that quick push 2 to 200 and reject, or a quick push up and have us just have like a slight look above the 32 and then fall down, or we can start recovering up and reject towards this midpoint of this area here, our previous value area high. I know that's pretty far up, but we were looking for this 585 as a secondary target, which is right around here. A secondary target if we do have some volatility that leads us to the push up. Unfortunately, the Powell meeting didn't give us that massive push. It also didn't give us that push to the 200 yet. But with this week, like I said, there's a lot of volatility that can give us a larger range until price starts to settle and the gamma levels start to balance out. And the gamma levels are basically the difference in your profit for each option contracts. So when there is a higher gamma, there's a higher chance of that contract being profitable based on a move in based on a nominal amount movement of SPY. So right now the gamma is going to be at the peak since the start of the new month. So until it starts to settle, and what does settling mean? It means that we're going to start to get it's going to approach its true value for the range that it's in. So for example, if you guys have ever held a contract overnight, you notice when the market first opened, even if the contract's kind of going against you, you open, and sometimes it's more than you paid for it at close, and sometimes you make like 5-10% off the contract, and literally within the next 2 minutes you're down 20-30%. It's kind of the same thing, right? Where that opening print, every contract is inflated until it starts to settle. That's why we always recommend trading after the first 30 minutes. So that way the calls and puts start to settle a little bit. So that way you can start to look for a trend and look for a good entry in whatever direction that you're looking for. And that's what this week is going to be. At least most of the week, we're going to have some the first half of the week, I'd say probably Monday to Tuesday, we might have either a push up drastically and then fill back down on Tuesday. This is all speculation, but we're gonna have a nice volatile range until we can start to settle on a midpoint of where price wants to sit. Let's go into the daily. As far as pathing, I'm gonna try to keep it fairly light because we're still in the middle of something that we were looking at last week for playing as far as playing out. On the daily here, we're just gonna look at the daily chart for a second here, take off all our lines. On the daily chart, first thing you can see is obviously the rejection. You can call it a rejection off the 5 SMA, but in reality we touched it right towards close, so you can't really confirm or deny that it's a rejection just yet. We're opening now on futures a little bit on the upside, so I think we might get that push towards the 200 SMA near our open. So we might get that, either that rejection or that small push earlier in the day, but let's see how the overnight price action goes. Once again, I'm just looking to see the green line here is our 20 SMA. We really want to start seeing it start to close underneath the 200. Then you feel more comfortable for a bearish outcome. So right now what we're looking for is that recovery. A recovery bounce. You could call it a bear flag consolidation, or however you want to put it. Let's not make that line like that. It's more so like this. Bear flag consolidation. So we kind of have a little bit of a range where even if we break over the 200, we kind of have a range here where we can have, let's change green, where we can have the 20 kind of curl up a little bit, and we'll have, I don't have purple on my thing, but we'll have the 200 slowly curl. It's going to continue to curl down slightly, so we might have that kind of divergence slightly in the price action until April opens, I would say. So this week will give us that little bounce. I don't know about a complete recovery. It's not completely out of the woods though, but we are at the area where we could have this small bounce and look for our true rejection areas, which are going to be the 20 and the 200. And if we get this slight curling that's going to be happening, especially if we can get the 200 to start catching up a little bit here, we're going to start getting that grouping of our SMAs. And then leading into the month, that's where I'm leaning more bearish into like the beginning of April. I think this week's going to be that over exaggerated price movement to settle the options contracts for the monthly expiry, which the next one is the 17th of April. So I'm not rushing into any bearish or bullish outcomes just yet. I just want to start looking for rejection. So that's going to be our major thing. And like I said, if you go through last week's video, it'll give you more of a breakdown of what I'm talking about. And then let's talk about what occurred this week. So last week I was mentioning that, how do I get this to be, or I guess that'll be good. Last week I was mentioning that I was looking to see if I can build out a channel for how the bear flag for SPY would actually look like. I wanted to see a few things. I mostly wanted to see us get closer to the 200. We didn't get that, but I was mentioning that we needed to have some closures over the 5. Once we had some closures over the 5, and we needed to retest this range here and either reject or push through. We did get that. So that's how I was able to build out my channel here for what our potential flag could be on our SPY chart here. So between there, I'm just going to be looking to see if I can identify any patterns in the meantime. But really, you want to start seeing either break out of this range or break up out of the range, that's going to be your major trend line for the week. We may not even get it until closer to Friday, or at least if we can retest this purple selling continuation here, which is just more of a controlled selling as opposed to stronger bearish selling like this. I'll go through it day by day in the channel so that way you guys kind of understand what I mean in the moment on a smaller time frame, and especially day by day. But what we can see for now is we still have that pattern that we were looking at trying to take place here, our head and shoulders here. Do we get the break this week? I'm not too sure. It's still playing out. We didn't get a clean head and shoulders, so it's more of a double top, but it's still the same pattern, a head and shoulders. We can have two heads and a shoulder. That's not completely out of the woods. That's not something that's uncommon, should I say. So we still do have that playing out. We were looking as well for so this is one thing, this is the pattern I'm really looking at. I know it sounds like I'm superly heading towards a bearish direction, but just for now I'm not seeing anything bullish until we start closing over the 5, till we start closing over the 200. Any price action underneath the 200 SMA is inherently bullish, and it will remain to be bullish until I start seeing price get over the 200. So I'm not looking just to short, but I do want to at least look for this pattern to play out, or head and shoulders pattern to play out, before I go rush into shorting. So as far as intraday, what I'm going to be looking for is just any continuation here in our buying channel, which I'll also put out in the morning. Any continuations here, and to see if we start to reject around this area, to see if we can have any pullback. So I'm just going to be watching intraday, any positive momentum, seeing if they're holding, seeing if there's any signs of continuation on any pullback. Is it failing to continue, or is it just a minor pullback on a bull trend? So we kind of fell in the middle here. That's kind of where what I was mentioning with there's not too much to rush into covering. But one thing we could also note is last week we were looking at a W pattern here building out, but we're not there just yet. I don't know why I drew this line. Let's get rid of that. Yes. So last week we were looking at to see if we have a W pattern, which was this W pattern. Look for a strong continuation over the 200 for the meeting with Powell. Obviously we didn't get that, and we had a rejection and then eventually lead into a gap down. Part of the reason for that was we have this area here that I mentioned last week that was more of a supply area, an area where we were previously rejecting multiple times. Now we've had a rejection here, and as well as we were underneath our 5 for quite some time. So I was looking last week to see if we can have a retest of this area and actually turn this area more into a demand for some further upside. And that's kind of where the W pattern would have gave us. It would have given us that push straight through into the meeting. We didn't get that. All we got was continued supply holding up here. So if you notice, we have this rejection here. Once again, any pushes up are being exited here. This is kind of where the idea of liquidity takes place. What do I mean by grabbing liquidity? These are the examples of that, where we have institutions that are buying around an area where it's a solid demand zone and exiting their positions towards towards a supply. So we have that taking place here multiple times to kind of confirm this area of being a liquidity zone, right? Where we're grabbing liquidity to start pushing down. Once again, we grab to push down. We do it again at the end on Thursday. We grab liquidity, push down. And once again, like I said, this little push up that we had, we were just holding over our 61.8. And our, even if we had a bear flag, let's just delete some lines here. Even if you were looking at it like a bear flag, however you wanted to look at it, the target was still the same. The 5 SMA, you could look at it however you want. Again, like I said, I'm looking at it as our final hold over our 5 SMA before breakdown. So if we wanted to continue to break underneath the 5, we would need to have one more retest of it. Fortunately, that happened the last 5 minutes, so we don't really know too much until we see how Monday opens. But long story short, once again, I am going to be looking for a shoulder to play out here for our head and shoulders. So that's kind of the only pathing I'm really looking at for. Let's look at our QQQ here. Let's get rid of this. Go to our weekly. All right, for our quick QQQ, nothing too much different than SPY as far as pathing wise. Once again, with the weekly candle, we have that indecision where we're sitting in the middle of our weekly's range, with a long upper body and a long lower body wick. And then let's pull up our fibs here. Let's pull up our. Alright, so pulling up our fibs here, we're still continuing to hold underneath the 50. So if we do want to have any recovery out of this range, I would start to look for that. I was mentioning last week that we were still holding this strong selling channel here for some time. And I mentioned that we were week after week leading into this selling channel. On SPY, it was not as strong. It was, kind of just a long body and then a bounce up and a smaller body afterwards, as opposed to QQQ, where it's just continuously long red channels, a long red body candles that are leading to our selling channel here. And I mentioned that. Let's go to the daily. I think I have them out. Yeah. So I mentioned on the daily that I was looking to see if we can have a bear flag play out for QQQ. It's more of a bear flag consolidation, similar to SPY. Unlike SPY, though, I didn't really have a boundary for what the flag would look like. For QQQ, I kind of roughly drew something out at during our last live. So we see here that we're still playing out of that. We have that on the weekly here. We had that push up, retest, and continue to reject inside of our selling channel here. And on the daily here, we're seeing that we have the bear flag consolidation playing out. So do we start to break out underneath here? It's kind of consolidating in this range. So for me personally, this consolidation here in this range, I see us still having some more upside here, at least temporarily pushing up. I don't know if we have that huge flush right away. Like I said, I think it's more geared towards April. I think this week we kind of just settle. Either we chop around or we have a small push up and then look for rejections, which is our 20 is going to start catching up here. So that was another thing that we were mentioning on SPY. Was one thing you wanted to see the 20 start to close underneath the 200. That's indicative of us entering a bear market. Where with QQQ, it's just been a beat down with tech as far as the rate cut decision. So it's not a quick decision to say that it's there yet. It's more like they're just being beaten down by this indecision as far as rate decisions. So what I was looking for, especially with SPY, is you want to start seeing a close underneath the 200, but what leads you to further confirmation of the trend holding is a rejection at the 20, and continue to reject at the 20, where I have blue, I don't have purple, where our 200 continues to curl down and eventually we want to see our 20 continue to hold underneath it. Even in a way, it rejects our moving averages do sort of reject off each other, right? So I wanted to see our 20 be the rejection to continue to hold underneath the 200, and then that's your confirmation for the bear market. We're not there yet. We're still seeing that slight early signs of it, but not necessarily there. That's why I'm saying that I'm looking for a retest of the 20. It would probably end up somewhere right around here because it's going to start curling with this push up that we have. So any pushes up towards that area and retest that range, we do have some thin structure here where we have, I would say, more of a gap in value. Not a complete value gap, but there's not too much price action in this range, right? We have a push up, rejecting out, push up, rejecting out, and then once again was on a downtrend here. We just had a small bounce out of this range. So if we do have a push up, I would say that around this area, the 488, 489 area, would give us that retest of the 20. And then if we get that slight push over to retest the 20, that would be ideal. I'm hoping we get it this week because it kind of falls in line with where our expected range is, which is 492. And the lower bounds of our expected range is 496, 469, I think. So if we get that push up and we have the 20 starting to catch up and price catches up to it, either we reject here, or we have a slight look above and reject off the 20 to continue going down and then give us that break of the bear flag here. So let's see if that takes place. We very much well can have a break over out of the bear flag here, but I would not look for any upside unless we can actually start clearing over 505, because our weekly expected trend was, I think, 503. Correct me if I'm wrong. 503 was our weekly trend confirmation for us breaking our weekly trend. Let's look at it again here. No, it's 505. So this is our break of a weekly trend. So any pushes up could just be considered a bear flag consolidation until we start closing over the 505. So it still gives us that room to push up near the 20 here, or even try to test the 200. But I think the 200 is going to start curling down a little bit here as the 20 curls up, and then we'll have that rejection around the area for further downside. As far as pathing here, I do not have anything spectacular for you guys. Same thing happening with QQQ, is I'm looking for head and shoulders to be playing out. I do not have the lower bounds of this range just yet. I don't want to go too quickly and say this is the trend line, because I still think we can either create a lower high up here or even a lower high, an equal high here. Then the trend line would look more, let's put green. Then the trend line would look more like this as opposed to where the yellow line is. So I'm not rushing to look for the lower bounds yet. It's never a good sign. It's never a good thing to just look for the bottom of things. So I'm being patient on that. As far as pathing here, I do want to see is create the head and shoulders pattern, like I said. Even if we do have any of those pushes up with our 20 catching up here, this trend line that you see here building out, it's that area of rejection that I was showing earlier on the daily here, where we have the gap and the slight gap in value here, and those wicks that are leading up to like just quick liquidity grabs on the way down. So I kind of drew it out here for the weekly on what that liquidity grab would be. So if we do have any pushes up with the 20 starting to catch up, a push up here starting to either, even if we look above here and start to reject the 20, then we know for sure that this area is where sellers are stepping up, or buyers are closing their positions, right? Because there's no confidence in price action above or out of this supply area. So that's one thing I'm gonna be looking forward to see if that 20 catches up, if we can break over it and start to push up, or do we continue to even not even make our way into it and just start to follow the rejection off of it. I know I drew that weirdly, but what I really mean is, you know, push up, reject again, and we continue to push up and reject. So even if it looks like we're creating higher lows on the way here, but we're really just rejecting off of our liquidity area here. So let's see which one takes place this week. Like I said, we're just sitting in the middle of everything playing out this week, especially with our weekly or monthly expiries here. So it's going to take a little bit of time for price to start to settle and decide on a range. This week is a perfect week for us to have pushes up and pushes down hard until we can finally settle somewhere in the middle. Where's the middle? I'm not too sure yet until towards the middle of the week when things start to settle down a little bit, and then we'll start to see actual volumes where we have, let's say, I think Joe Ryder's here, so he would be really good on that. But if you look at on the weekly, not weekly, daily, he'll be looking at the options volumes for different strike prices, and towards the Wednesday, Thursday, that's when you're going to start seeing like option strike prices having meaningful volume, because right now we can have a crap load of calls at 488 and also a crap load of puts at 474, and you don't know which direction it is, right? It could go either way. They could be equally, the volume could be equal. So until it starts to settle where we can have a strike price have a significant unusual amount of volume, because price eventually settled and it's gonna eventually choose a direction. So like I said, let's let the week play out and see how it goes. As far as IWM, there's nothing too much to say here. I think last week I was mentioning a possible bounce here for it with the inverse head and shoulders on IWM, where we have I think I had the shoulder here like this, right, where we have the shoulders here and a push up. We didn't get that. We're continuing to reject over the 20, so I have not seen any retest of the 20. Our main thing that we were looking at last week is I wanted to see the test of the 38 here. Another rejection here would give us nice strong downside. We didn't get that yet, especially since we started to break out of this selling continuation here. This is more of a stronger selling, and this is when we start to taper to create the flag. So we did have the break out of that slightly, but we didn't even get up to the 20. So like I said, we're just kind of sitting in the middle here. I'm not going to go too in depth in rushing into a pathing. Once again, similar to SPY, for week after week we've had the 5B, that rejection, so we finally have that push out of it, and then it started to slightly support, and now we're underneath it once again. And I'm hoping with if we continue this solid action overnight, we might open up just over the 5, and we might get that 20 rejection for further downside. Well, like I said, I really want to see how Monday opens, because that's going to be your major thing this week. You could still look at the pathing that I drew out last week. You still look for the slight head and shoulders for now. Even with the head and shoulders, I'm not talking inverse head and shoulders. I'm not talking a huge push up reversal. I'm looking just to retest the 50. We have a thin structure here. If we start to close over the 38, it's not going to have too much of an issue trying to get towards the 211 area if it does get that. So let's see if that's the case. As far as any downside, I would not really look to short yet until I start seeing a close underneath 202. that would bring us back into our selling here, and then we can start to look for any patterns that are playing out, whether we're looking for a head and shoulders to really play out with the head down here, for further downside. So we still have like a few days worth of price action to really decide where price is going to gravitate towards, especially with the expiry once again. And also to mention, as far as I'm trying to remember, I think Moen will probably answer this better than I will. Moen, are you here? Hopefully, no. So
Hi, I'm here.
yes,
Tell
are
me.
you able to explain the triple witching? Because I'm not too I probably won't be able to explain it as well,
I
but
think it was a quad witching, not triple,
yeah,
last week. Yeah.
yeah, it's it's they kind of fall on the same thing. Just the term is
Hmm.
triple. It happens 4 times a
Yes.
year. So if you can explain, that
Four
would be
times a
nice.
year.
Yeah,
Yeah. All right. Let's give it a shot.
yeah, you
Okay.
probably do better than me.
So on every third Friday of the month, okay, which was like on the
Just
Friday that just happened,
yep.
okay, 21st, we have this thing whereby you will notice like three, four things happening. Okay. The first being, this is the monthly auctions expiry date. So that was the primary thing. Okay. Now, the second one is you will notice like on the futures contracts, technically those futures contracts never expire, but they roll over every quarter. They roll over to the next quarter on the every third Friday of the quarter end month. So the January, February, March is a quarter end month. The third Friday was like the 21st. So your futures options typically on the indexes like SPY, QQQ, those also expired on the same day. Okay. And the new ones basically started rolling over. So those of you who trade futures, you will be noticing like we switched from U to the M contracts. Okay. Then the stock index futures we talked about, options we talked about, the single stock options, okay, and that as well expires for the monthly on the third Friday. And the single stock futures on some of them that is offered, that as well expires. So you will notice like on the third Friday of every month, September, December,
Can you
November,
get my
December,
vape box right there?
January,
Oh.
February, March, like just after this, there's a little period time window where the volatility continues, and from then onwards, like the volatility will hopefully settle down because last 2 to 3 weeks we had some crazy volatility, like all of a sudden candles appearing, taking your stop losses, and then moving the other direction. Okay, so we hope we can avoid that, things settle down. Let's see how is it. Smooth, mind bringing up the VIX and explaining it a bit in terms of the volatility?
Okay, yes, I'll bring that up right now. But yes, so the to add on what he said really quickly about the triple witching, he explained it very well. We have the first thing is our option monthly expiry that already leads to a little bit of volatility, and then every 4 times a year, so every quarter, we have the triple witching, which is where the futures expires, indices expire, and the single stocks expire all at the same day. So that's where it gives us that, one, it gives us a lot of volatility, and two, it's a good opportunity for a new trend to form, right? So does that mean that we have a complete run up? No, but it could give us that small push up. It could also give us, further confirmation for downside, however the case is. But usually, this is the perfect time for a new trend to start to form, at least one more clearly. So as far as the VIX here, I go through it as best as
Sorry,
I
can
can.
I pause you for a second?
Yes.
Okay. Those of you, I mean, are new comparatively to trading or does not have an idea about VIX, would it be helpful if Smoove explains it? Like what is VIX?
Yeah. So
Or
Yes.
I'll go ahead and
yeah,
explain it. Yeah. So VIX is, it basically calculates the volatility in our S&P index, right? And what is volatility? It calculates the the range that price is able to move, right? So I think it'll be probably easier to draw something out, right? So, and with VIX, anything under 20 is more is safe volatility in the market, right? This is where you're going to start seeing those clear patterns where you're not as stopped out as much, where you can literally look at your where you want to stop out and get out easily, more safely, I would say, as opposed to when it's high volatility where we have price action that, say you're going up, it slightly dips below your stop loss before shooting up. High volatility markets will do that to you. So let's quickly draw an example of what like a high volatility candle would look like, right? So if SPY is moving, little by little smaller candles like this, underneath 20, where we're having, let's say, a trend up, right? On a high volatility, which is over 20, anything over 30, I would recommend do not trade, period, point blank. But anything over 20 is more volatile. So that means that our candles can start to look like this in an uptrend. Where we have, do you notice the difference in the candles here? Where we're still continuing an uptrend, but they're just much longer body candles. So volatility in the market gives us the movements that we're looking for. So a lot of the times you'll see, especially with us in futures, me and Moen, we'll say there's not enough volatility in the market that I'm not trading futures, meaning there's not enough price action on the upside and the downside. It's kind of consolidating in a range. For options, that might be a good thing, right? Because then you can, depending on how far you're out on your contract, you have a little bit more opportunity to wait for something to take place. As far as futures, it's going to be really difficult, because if I'm taking a trade down here and the next minute is up here, I'm down a lot of money. So with the VIX, it basically calculates the range that each candle can move with price action, right? So if we have a positive price action, we're going to have large body candles green. And even on any small pullbacks, they're going to look like the price is completely like failing trend, right? But it's really not, and it's going to start pushing up. So the main thing with VIX is if it's underneath, if it's over 20, you're going to start seeing these large movements, large body candles. And what do they mean by that? That's like your 20, 30, 40 cent candles, right? It's unusual for SPY to be moving in a single minute $1. Like that's not normal. That's extremely volatile. And the VIX basically calculates that for you. So, and it also helps when the VIX is lower, because it kind of gives us we don't have to worry as much about stop loss triggers, because the price will kind of slowly move in the direction that you're looking for. And what do I mean by slowly move? I mean, we're going to have like, small push and pulls, and then it continues up, as opposed to when the VIX is high, we start seeing these long movements like this on the way up. Right, that's really hard to trade, because 1 minute you're up and the next minute you're down severely, but the whole trend is up. Because you look at the end of the day, and you could probably you can tell a friend or family, say, hey, like, whatever, I lost money today, and you would say that I was going long, and they look at the chart and the charts are just going up, right? But they don't know that in the moment these candles are moving so volatile up and down. So as far as what we're looking for the VIX is, anything under 20 will give you that safe middle ground, where you can start to really look at your levels, your supports and your resistances, to look for either entries or exits, or even stop losses. While it's over 20, you're going to have large body candles that can move in and out fluidly through supports and resistances. That's why I tend to not look at support and resistance as a sole end all be all. It's more of a range around price that you either supports over or resist over, where it's more of a range instead of a flat level number. But when we have VIX underneath 20, you can start to look a little bit more towards a level being support, because if it gets to it, it will have either that bounce, but it won't have that huge look below the support where it kind of looks like it's failing support before it brushes up. Hopefully that made sense to you guys. It's always a good indicator. It's not something you want to be looking at every single day of the market. But if you ever find yourself wondering why I keep getting stopped out of a trade, or it's been hard to find a direction in the trade, it's always worth looking at our VIX. And if it's over 20, there's your clue why you are having trouble trying to find a direction in the market. And if that's the case, and if you're struggling, I would recommend just taking the day off. Not every day we need to force trades. All right, and I think we're pretty much nearly over our time here. Nothing too much on the sectors. If you look at our last video, once again, you'll see that many of the trends that we pointed out last week, I can't really speculate any other movements on our other sectors. As far as your XLF, XOK, XLE. If you look at last week's video, you'll see that, for example, that our let's see, our financial sector. Last week we were talking about how we finally had that downwards momentum in the financial sector, because for some time we've had the tech sector being pushed down. Our financial sector has been running up while tech has been down, so it's kind of giving us that indecision in the market. And I mentioned last week that we finally got that push down. We're looking to see if we have a recovery in our financial sector here, starting to recover, reject around a 49.50 area, and then see if we break out of it and continue the downtrend. Then we'll feel more comfortable saying that the sectors are starting to suggest downside on SPY, because if we have our financial sector going up, we have our tech sector going down, and let's say our energy sector is up, we have our health sector up, everything's kind of going in opposite directions. So this week was that one was, let's look at this one. Yes, so this week was the pullback that we needed, and the recoveries as well on different sectors. I go through it a little bit more in depth in the video, but this week we're just going to keep it short and just wait for for price to kind of settle. I'm not rushing into speculative directions for SPY or QQQ. I know it's kind of odd. You guys were hoping for a little bit more this time, but we're kind of in the middle. So I'm waiting to see some clear direction, right? Like last week, we've had more clear direction, and that gave us what we've seen on the market. So let's see if we can have that take place again, and hopefully by next Sunday, I'll give you something spectacular. As far as any of our mega caps, there's nothing too much. We're still in the bear flag consolidation that I mentioned on Nvidia. And last week I mentioned that if we have any price action under 127, if you're thinking of going short, go short. If it's under 116 now, I would not rush to short, because this is where we could either bounce, but I would look for some failures at 116, because that will be the break in the flag. This week we've had that little chop underneath 127. As far as Tesla, once again, it's still in the bear flag. I'm waiting for it to play out here. It has quite a bit of room to go, so I would just look for rejections along the way. Once again, Moen posted the levels, so I would look for that for any upside. As far for downside, I would just start to look for the rejection at the 248, which we mentioned last week. So we got that push towards it. So let's see if we start to reject in that range, and hopefully towards the end of the week, we'll have that continued rejection off our selling channel here. If we get that rejection here and then break underneath our blue recovery channel here, we'll definitely see that further downside on Tesla that everyone's waiting for, right? The huge pushes down. You're like, when it's going to be over? This is the time where we're having that bounce first before it, it could actually just recover. But if we're looking for that perfect entry for a downside, we're in the middle of that, right? so we can't really rush to short just yet. As far as Apple, we're kind of chopping in the middle of the range here. We didn't break over 219 like I mentioned. We needed a rejection here, specifically for any shorts. I was looking for the 207 failure. We didn't get that as well. Quickly on the XLY. On the XLY here, this is what I was mentioning for some time. This is what we were looking for any continued downside on on Tesla and Apple. We were looking to see if the XLY continues to have failures, and for some time we've had some failures on there. But if you look this week, we wanted to see some rejections near 200 or start to clear over 200, because that would give us signs that we're going to have that small bounce on Tesla and we'll have a little bit of a recovery on Apple. We didn't get that. Once again, it shows that little bit of chop here, which is more clear on Apple than it is on Tesla. On Tesla, I mean, it did group in this area, but on Apple kind of follows with the XLP, where we're having this small little consolidation area. So we're starting to create that uptrend, or you can say recovery out of a downtrend, but we're just not there yet, and we're still sitting in the middle of both of those things. So let's see how this week goes. If anybody has any questions, feel free to drop in the chat. Otherwise, I think I'm gonna end it here. I know it was a little bit of a short one, but we're like I
You have a
said,
question in the
kind
chat?
of in the middle. Can I look at?
Ronnie, Rummage sent GEV.
You have two now.
Oh man, guys! All right, hold on. Let me go ahead and end the recording here.